Okay, we welcome you back to Newsmax Now. Did you see what China is up to? Some financial experts are calling it an act of war, a currency war to be exact. Think about it. China needs to up its exports to improve its sagging economy right now. So by making its currency less valuable compared to other global currencies, China can make products manufactured in that nation, or in other parts of the world, effectively more expensive and harder to export. That's the simple part of all this, but there's much more to it, and that is why the world economy is reacting the way it did with great concern. China has rattled the global economy. The 2% devaluation of the yuan has already pushed the U.S. dollar higher, and right away, U.S. stock indices dropped more than 1%. Global equity markets also fell sharply. Oil sank even further. It also raised fears about a new currency war as other nations devalue simply to compete with China. And there are political implications. Donald Trump says China's surprise move is going to have a huge impact.
They're just destroying us. Our currency is going up, which sounds good, but actually, if you look at what it's doing to our country, and they're cutting their currency, they keep devaluing their currency until they get it right. They're doing a big cut in the yuan, and it's going to be devastating for us.
According to the Wall Street Journal, the most immediate effect is that it signals to the world that Beijing thinks the Chinese economy is sputtering. The move suggests China is looking for ways to get it going again, but it also has major implications for the U.S. and other countries that trade with China because it puts their companies at a disadvantage. Now, the move could also cause some serious tension when President Xi Jinping visits the U.S. in September. And joining us now for more on this story is investment expert and author James Davidson. James, great to have you with us. Now, explain what all this means to the average investor out there and why the Chinese decided to do it.
Well, I think the first thing that you ought to take away from this as an investor is that it means that this great story that we've heard so much about, China growing at fantastic rates and continuing to grow forever, is over. The Chinese had very weak numbers. They've spent $1 trillion trying to prop up their stock market. And what we know about the Chinese renminbi yuan as compared to the dollar is it's one of the only currencies in the world that has not devalued a lot against the dollar in the last little while. In fact, it is up about 20% against a basket of other currencies that the Chinese trade against, like the euro, the Japanese yen, the Indian rupee, and the Russian ruble, etc. So they devalued by 2%, but they're only catching up to a devaluation which has happened in other countries already. So there's a very big There's a very big problem there that this is not going to be the end of it. If you go back to the Plaza Accord, which happened back in September of 1985, when the U.S. decided to try to devalue the dollar, we did that. We initially had a small devaluation, but by February 20th of 1987, the dollar was down 45% against the German Deutschmark and 39% against the yen.
Well, right now, James, the dollar, of course, is considered a strong dollar, so that's having an impact on global trade as well. But there's also this part of the story that China did this as retaliation to the IMF. They wanted to attain this reserve currency status, and the IMF said we're not ready to do that just quite yet. Do you believe there's some sort of retaliatory action involved in China's decision here?
No, I don't think it's a retaliation. I think it's a case of them actually doing what we told them to do. We said to them that we wanted them to have a more market-driven currency instead of having a controlled currency. So they moved in that direction, so that we're going to have a hard time criticizing them because we told them to do what they did. And I think, that what we really see here is, more importantly, I think, in the future will be the question of whether they take a further step and devalue against gold. This is all part of this maneuvering to become a reserve currency, and the next step is going to be very important, but it's completely obscure what they're going to do. I think we'll see a very big problem continuing in the commodity markets. You saw that the price of oil fell to a new recent low today, and it probably is it's teetering on the brink of support. It might go down even much, much deeper. Most of the commodities in the world are priced in dollars, and they've been plunging, and this has been very bad news for the emerging markets. The Chinese have a tax policy which might be more interesting to discuss than their currency manipulations.
Well, we'll have to have that for a separate discussion, because I would be interested in talking to you about that. But bottom line, serious trouble on the horizon. Is that what this indicates to you for the Chinese economy as a whole?
I think, yes, the Chinese economy, the great boom in China is over. And I think we're going to see in the next little while an amazing deflation in the world, and perhaps the end of this great bubble of debt that has been created since World War II.
Well, that would be a monumental shift in the way the global economy works. James Davidson, thanks so much for being with us, for your take on these and other financial matters. Great to talk to you.
My pleasure.
All right, we've got more coming up here on Newsmax Now. We're going to take a look at some other key issues today. And don't forget to stick around. Your headlines and punchlines will be coming up. Also tonight, you want to stay tuned. Louis Gohmert will be on the Steve Malzberg Show. He's always interesting. And Newt Gingrich will be right here on Newsmax TV on Prime, 8 p.m. Eastern Time. You'll want to hear what he has to say about Donald Trump.